Okay, as we start with the short-term liabilities here in Connect, I'm skipping now up to number 3. The first one just deals with some real simple entries on recording some sales tax. I think you should be able to do that one. Number 2 is similar to what we're going to do here in number 3. They both deal with interest. This one deals with interest over a 2-year period. So we're going to look at the expense and the payable going into next year. So that's where we're going to start here with number 3. We got borrowing $200,000 cash towards the end of in November, and going into the next year, a 90-day note. So a 3-month note, 9% interest. Now the really thing that I don't really like about the book problems like this is when I do a 90, I just say 3 months. It makes it so much easier. 3 out of 12. 90 days, you've got to actually start counting them up. So you know November, this is where you've got to have your months memorized and be able to add these up. So we got November has 30 days, December has 31, so now we're at 61 days, and this is a 90-day note, so that means there's 29 days left. You always count the, you never count the first day. I should go back on that one then. No, whenever you have a loan, you never count the first day, but you do count the last day. So technically on this one, November would only have 29 days. 29 days, and then December will have 31. So 31 and 29 is 60. So then we got 30 more days in January. So by my count, this would become due January 30th. Because again, you don't count the first day of a loan, you count, and then you do count the final day. So that's when the loan is going to come due. 90-day, 9% note, $200,000 face value. All right, so let's go down here and start filling in the chart. Principal says, okay, what's it worth? We're telling it it's worth 200,000. The rate is 9%. The time total through maturity, so it is 90. It is let's go back up here and make sure. 90-day note. So we got to find 90, and then total interest. So let's calculate that up. 90 divided by 360, I always like to work backwards, times 0.9% times 200,000. So total interest we're going to pay is $4,500. Now what it's having us do in this little chart is before we get to the journal entries, it's going to go ahead and have us figure up how much interest did I owe in 2017 and how much do I owe in 2018, because it's broken out over 2 years. So the first part is we added up November and December. There was 29 days in November, not counting day 1, and December had 31, so that's 60 days. So I'm going to go ahead and we're going to show 60 here. And then my total interest, let's calculate that out, 60 divided by 360 times 9% times 200 grand. $3,000 out of the $4,500 was earned in 2017. And in January, all we have left is 30 days. And I can just do the math here. I could calculate it out, but I know if 3,000 was in the last year, that means I still have 1,500 left for this year in 2018. Now I'm going to use these numbers. So I'm just going to have to scroll back up and down, but it's not that bad. 3,000 for interest that is due in 2017 and 1,500 for the following year. Okay, so we come down here, we're going to record the issuance of the note. So remember, we are the one getting the note. So we're getting 200 grand cash and simply just calling that a note payable, 200,000. So the first journal entry is very easy. Now, at the end of the year, I need to show that I've accrued interest. Even though I don't pay it yet, I need to put $3,000 on my books to go for the year 2017, and then show that since I'm not paying it, that I still owe $3,000. And then finally, we're going to record payment of the note of maturity. So I'm coming up here and I'm showing, okay, I need to get rid of my note payable for 200 grand. I need to show that I paid off last year's interest, 3,000. And I need to show that I'm paying this year's interest of 1,500. So that's where these two numbers come into play. And then finally, I'm paying back with cash the entire $204,500. Go in and check my work. And it looks like we got everything correct. Okay, this next one, this is a good, that has a good overview of a lot of the different payroll taxes and having caps involved. So remember back to my lecture, I told you that the book, they're not expecting you to memorize the FICA or any of the percentages. They're going to go ahead and give it to you, and they're going to give you the cap. So depending on which version, if you're in the summer 2020, then yours is going to look like this number. If you're in a future semester, your amount here will be different. That's going to be really the only difference in these problems. The Medicare rate, remember there's no cap on that. FUTA and the SUTA rates are given, and they say that both of them are capped at 7 grand. And so all those caps are going to come into play with one of our 3 employees. So what they give us here is 3 employees, A, B, and C. Employee A hasn't worked that much. They've only earned $6,400, and they are due payment of $800 for this next payroll. Employee B, what they're due and how much they've made, and then employee C, it makes a lot of money. They've already earned $112,000 this year, and they're getting paid another 8 grand this pay. So what we're going to do then is figure out how much payroll taxes need to be taken out. And you can see they've broken this down, employee A, employee B, and C. Okay, so for employee A, how much, for FICA purposes, how much of the 800 do I need, am I going to be taxed on? And that's basically asking, are we going to hit a cap? Are we going to hit this cap if we take 800 plus the 64? And the answer is nowhere near it. So we're just going to be taxed on the whole 800. And then the next one says, go ahead and fill in the tax rate. Well, that's 6.2%. And then they're going to they're just going to do the calculation for us. It says, okay, that's how much needs to come out of the employee's check. Now Medicare has no cap. So no matter what they've made, it's going to be the full 800. And then Medicare is 1.45%, which they give us. Now, when we come down to FUTA and SUTA, this is where cap comes into play. The cap is 7,000. If I add 800 plus 6,400, I'm going to go over that cap. So then what I have to do is focus on this number and the cap and say, if I'm at 6,400, how much more do I have to go until I get to 7 grand? And in between there is only $600. So I don't want to tax on the full 800. I only want to do until I get to the cap, which is $600 more. The rate for FUTA, 0.6%. And then finally, FUTA and SUTA have the same cap, so that's going to be the same 600 here. And it tells us the SUTA rate is 2.9%. Now, when we come down here, let's go ahead and for our next individual, they have already went way over the feud and SUTA cap, but they're nowhere near the Social Security cap. So for the they made 2,100. So I can put in the full 2,100, 6.2%. It went ahead and just pulled that down. That was nice. Medicare 2,100. Now for FUTA, if I add the 18.2 plus the 2,100, I'm way over the cap. I'm already over the cap here, over the 7,000. So how much tax I'm paying? Nothing for FUTA and SUTA. Now for employee C, they're way over the FUTA and SUTA tax. So those are going to be zero, just like employee B. For Social Security though, I'm getting really close. If I add up 8,000 plus 112,200, I'm going to go over the cap of 118.5. So then what I have to do is figure out how much is left in between. So I take the high number, 118.5, and then simply subtract where am I at now. And that's going to give me how much I have left in between those two distances. So instead of taxing 8,000 for Social Security, I'm only left with 6,300. Medicare, it has no cap, so I'm going to tax the entire 8,000. And then finally, FUTA, nothing, and SUTA, nothing, because I'm way over the cap. So we can check the work. Okay, looks good. Now, for part 5 and 6, they're going to ask us about employee A. So I'm just going to get a sheet of paper here, and off to the side, I'm going to write down these amounts. I'm going to write down Social Security at $49.60, so I don't have to recalculate it. Medicare $11.60, FUTA $360, and SUTA $17.40. So for this one, they want us, we're gonna have us put it in again, which is fine. Assuming situation A, employee A, prepare the employer's September 3rd journal entries to record salary expense and its recorded payroll liabilities. All right, so they're gonna, basically, they're kind of having us do the same thing as we did before. So we're figuring out how much do they owe. It's telling us, like I said they would in my lecture examples, they're telling us the federal amount that's coming out, $80. They just go ahead and give it to us. Remember, for employee A, we're nowhere near the cap. All 800 is taxed. Tax rate 6.2%. And then for the Medicare portion, no cap. So the full 800 at 1.45. Now we can come down here and do the journal entry. So we're going to record the employer's September 3rd journal entry to the salary expense. So we're just doing part 1 on this problem. And we're going to do the second journal entry in number 6. So we got our salary expense for the $800. So that's how much they owed. Now I got to take out all of the taxes. So the first one they gave us was the federal income taxes. That one was $80. So that comes out of the paycheck. And then we've got the FICA. I always like to do them in order. I don't like to put them in any order. I'm going to do Social Security. And that was $49.60. Looking at my little notes, I could scroll up. And then I had the FICA Medicare for $11.60. Now, it's telling us that they didn't pay it. This was accrued. What that tells me is they still owe the employees. We then call this salaries payable instead of crediting cash. And we're simply just going to take then the 800 that I owed minus all of the taxes they're taking out of their check. So $658.80. Let's check their work. And that looks good. Now we're ready for part 2 of the journal entry, the employer's part. So they're having us go ahead and calculate the 4 things that the employer has to pay. So they still pay Social Security, same as the employee. They pay the Medicare, same as the employee. Now, they also pay FUTA. And remember back the FUTA, we're not going to pay all 800 because we're going to hit the cap. We only have $600 left of the cap. The FUTA rate is 0.6%. And then the SUTA rate is the same wages, $600. And the SUTA rate is 2.9. It's telling us that all of the taxes, it will go ahead and add them up for us. So that's going to make it easy for us to do our debit. Because remember on our lecture example, I put in XXXX because I don't know what all of those added up to until I did it. Well, here they go ahead and have you add them all up. So it's 8220. So when I do the part 2 of the journal entry, I do my payroll tax expense for the payroll tax expense for the 8220. Then take out those 4 items. Social Security was $49.60. Medicare was $11.60. FUTA, let's see, federal unemployment, they don't abbreviate it for that. And that was $3.60. And the SUTA, state unemployment, was $17.40. Record that and let's check our work. And everything looks good. Okay, with this one, when they give you a whole bunch of numbers, you just got to break it down into individual pieces. So they're telling us that we have 2 different types of workers. We have the sales people and then the office people. So we're going to have 2 debits then for our wages expense. We're going to have a sales salary expense and an office salary expense showing that they're wages. And then they go ahead and combine everything to show you how much taxes are taken out. You don't have to calculate anything. And when they come down here to non-tax things, extra things taken out of your check, like medical insurance premiums, it's telling us when we get down to the next sentence here, the employee of that $7 grand medical insurance, the employee pays 40% of that, the employer pays the rest. And then they give us the FUTA and the SUTA rates here. All right, so when we get to this one, the first thing they're going to have us do is just simply calculate how much is the employee and the employer paying for the actual medical insurance premiums. $7,000 was paid, but who has to bear responsibility for each of it? So the medical was $7 grand. Percent paid by the employees was 40%. So it's going to then calculate it for you. The life insurance was $4,000. And that's also at 40% rate. from the employee to the employer. Now what we're going to do here is we're going to record the accrued payroll, including all of the deductions. Okay, so we'll start off with our 2 debits, because with this problem, when they have them separated, that means they want you to separate them in the journal entry as well, not just have one big wage expense. So you're going to have a sales salary and then an office salary. Sales salary expense was $200,000. And our office salary expense was $160,000. All the rest of them are going to be now taxes taken out or other withholdings. The first one was our federal employee Fed income taxes payable. They told us what that is. So let's just do them in order. So we're going to do 90,000. Then the next one is our state income taxes at 20,000. So we put in 90. And then let's put in here employee state income taxes payable. And then let's see what's next. We have our Social Security and Medicare. All right, Social Security, 22,320. And we have our Medicare. Medicare was 5220. And then the next one is our medical insurance premiums. So 5220. Employee medical insurance. How much does the employee pay? Well, that's what we did right here. 2,800. And then we have the employee life insurance, and they pay 1,600. All of this, it says it was accrued, and then we're going to pay it later. So we're going to show first that we have some kind of a wages payable. Let's call it a salary payable. Yeah, there we go. And let's see how much we owe them. So we're going to, if we add these two together, that's 360,000. And then start subtracting out all of our credits. So we owe the employee 218,060. And it says go ahead and record the cash payment. If it was me, I would have just put cash here. No reason to do the entry twice, but that's okay. They can have us do office salary payable, salaries payable, 218,060, and then credit my cash for 218,060. Now what they're having us do is go ahead and do the employer piece of the journal entry. So we just did journal entry number 1. Now to calculate journal entry number 2, they're saying state unemployment taxes payable. So that's our SUTA, and then our FUTA. And it's telling us that record, let's go back up here. And salary subject to unemployment taxes are 50,000. Okay, so they tell us that in the problem. Not everybody's salary. A lot of people are going to hit the cap. Some aren't. It tells us here that the SUTA rate is 5.4%. And both unemployments are going to be the same. They in the book cases, they're not always like that. It depends on the state you live in. In Indiana, they're not the same cap. And the percent is 0.6. So I'm going to write down these numbers. I'm not sure if they're going to give it to us. So our SUTA rate, I'm going to need to remember, is 2,700. And our FUTA rate is 300. And then what I'm also going to do, okay, that's good. I'm going to go back up here and see, remember we had what the employer pays is the Social Security and the Medicare. Now, it tells us here in the instructions, record the accrued employer payroll taxes and all other employer paid expenses and the cash payment of all liabilities for July, assuming the FICA taxes are identical. Okay, so so this one's broken into 3 parts. First, we're going to do the payroll taxes. Second, we're going to do the benefits. Okay, so first one, we're not going to worry about the backup in part 1. We're not going to worry about this yet. We're going to do that in part 2, these 2 numbers. But while I'm here, I'm going to go ahead and jot those 2 down. The medical was $4,200, and the life insurance was $2,400, because I know I'm going to need those. All right, so now we have our payroll tax expense. I don't know what this is. I haven't added them up yet. Let's put in the 4 things that go into what the employer has to pay. So the employer has to pay the exact same amount of Social Security. So $22,320. Employer also has to pay the exact same as Medicare, which was $52.20. And then we've got our federal income taxes payable, which is one of the numbers I wrote down, $300. That was from the previous part. And then the employee state taxes. And what's one of the numbers I jotted down? $2,700. And when I add all of these up, I will get how much extra taxes the employer had to pay. So I take the $22,320 plus the $52.20 and $2,700. So $30,040. Now we're going to come down. We're going to come over here. Employer benefits expense. They don't have them broken down, so I don't need to expense each one separately. It's saying go ahead and combine both of them together that the employer had to pay. And those are the 2 numbers that I wrote down just a second ago. Remember, I wrote down $4,200 for the medical piece and $2,400 for the life insurance. So that was $6,600. Now is where I do break them down, because I got to know how much do I pay to each company. So for the medical insurance payable, I pay $4,200 to those guys, and then for the life insurance, I pay $2,400, and both of those together is where I get the $6,600. Now finally, record the cash payment of all liabilities related to the July payroll. All right, this is going to be long. All right, let's do them in order. So if you were doing this, it would be good to have T accounts set up for all of these liabilities, not the last one because I've already paid it, but a liability for each one of these. Because we're going to pay off all of these, and we're going to pay off all of these. All right, so let's just start doing it. Let's get down here to the 3rd one. All right, first one that came up was the federal income taxes. Only the employee pays into that. So I know that amount was simply $90,000. So when I go to pay that to the IRS, I'm paying 90 grand because that's all there is in my T account. That's not the case when I go to the FICA for Social Security, Because when I go to pay that bill, if I did the T accounts and I looked at my Social Security withheld, I'm going to see that I have $22,320 in there twice, once for the employee and once for the employer. So I got to take $22,320 and basically add it together. That's how much is in that T account that I need to get rid of. So $44,640. I'm going to do the same type of thing for the FICA, for Medicare. For the Medicare, I'm going to see that I had $52.20 for the employee and another $52.20 for the employer had to match. So total that I owed to the IRS for Medicare is $10,440. The next tax that I need to take out was my federal unemployment. That was just on the employer's piece. And when I wrote it down, if I look back to my T accounts, it was only $300 that is in that T account. And then I had the employee state unemployment taxes. And that in the T account is $2,700. And then finally, I had the medical insurance payable. When you added up both the employee and the employer, and it told you this in the very beginning problem, remember it was $7,000 for both of them combined. So I know that that's what's got to be paid, $7,000, because the employee and the employer portions together will add up to $7,000. And then for the life insurance, it was $4,000. So my life insurance payable, $4,000. Now we're ready to write checks to each one of these departments or companies for all the amounts that I owe. And I think if I was doing T accounts, I could be more accurate, but let's go back and make sure I want to save it, yes. I hope it saves it. Federal, oh, I didn't do state yet. I got to do state. I can do that one. So state was 20,000. I did my 2 FICAs and I did these, so that's good. And I did the FICAs again. I times them by 2. I did the unemployments. I did the medical. Okay, the only thing left that I forgot to put in, I need to bring cash down one more, is I need to do the state income tax. And that was 20,000. Now I'm ready to make payments. I simply just want to add everything together. $179,080. There we go. Okay, everything looks good. It's saying the only thing, oh, I just put in the wrong. This should say federal unemployment. That's why those are 2 X's there. This should say I just put in the wrong one. Okay. And this should say unemployment. This number is correct. I saw this up here as well. If we go back up to number 1 and 2, it's going to show you an X. And I had this yesterday when I was going through these. This number has to be correct. If all of these are correct and this is correct, there is a glitch in the program. If you ever have something like that, let me know. But I've noticed that this is a glitch here. That you can't, it has to be that number. I've done it twice now, and that it can't be anything else. So my computer is locked up. So if you ever have something come out and you don't know why it's wrong, let me know. It could be a glitch just like this one was. And then again, the only reasons these were missed is I just didn't pay enough attention. This should have been employee FUTA, federal unemployment taxes. All right. I just got, I think, one more that I want to do, and that's warranty. This is another example of payroll. All right, here's the warranty one. Remember back to the lecture example, you want to do the warranty based on the percentage that is estimated, just kind of like doing depreciation as an estimate, doing the allowance for doubtful accounts as an estimate. This is an estimate as well. So we sold a copier. It cost us this. We sold it for $6 grand, cost us $4,800. We did this back in 2017, and then a whole year later, in 2018, we go ahead and make repairs. They cost us $209 in repairs, taken from the repair inventory. Based on this, based on their prior sales, they say 4% of all of our sales is going to come back and be a warranty expense, an estimate. So just on this sale, we're going to have a warranty expense. We sold it for $6 grand, and we're going to do the journal entry in just a few minutes. But my warranty expense that I need to put on, I'm going to estimate $240 of warranty. And then it says, well, how much liability do I still have at the end of 2017 of estimated warranty? I haven't used any of it yet, so I still have all $240. And then it says, well, how much expense do I calculate for 2018 when I actually go in and do the repair? Well, I've already expensed for that machine back in 2017, so I'm not going to expense any more. I already expensed it. I'm simply going to take away from now from the liability to pay off of that expense. So it says the actual amount was 209. I had estimated 240. So it's saying how much do I still have in that estimated account if I had 240 and now I've used 209? I have $31 still left in that estimated account that I may either use on this client if I need to, or carry it over to another client who may have a more expensive warranty. Now let's go ahead and do the journal entries. This is just like what we did in our lecture example, where we're going to record the sale, the cash sale. So I'm getting cash. They don't say anything about sales tax, so I just put it in as simply our sales. And record part 2, the cost of goods sold. And that was $4,800. Taking it out of our merchandise inventory. Now we're going to go ahead and record the warranty expense for the year of the sale. And that was $240. Warranty expense $240, and credit that estimated liability, estimated warranty $240. And then finally, now we're in 2018, we need to record the cost of that $209. Well, I've already expensed it. I'm going to then take it out of that estimated liability account, 209. And instead of crediting cash, I'm just going to take it out of my materials for the repair parts. So repair parts inventory. So this company has 2 different types of inventory, the regular merchandise and then the parts. And that's how I'm pretty simple once you've kind of gone through the steps from the lecture example. And there we go. All right, that includes everything that I wanted to cover on this one. The rest of them are review or things you can easily find. Just looking up a couple simple formulas, doing a couple ratios. So with that, we will end our lecture for short-term liabilities. Next lecture will be long-term liabilities, and then we'll get into owner's equity items.